Now guys, what I am going to tell you in this video is taught in the extreme expensive courses and workshop. So in this video we are going to talk about the long-term options, and that will create the base for the upcoming videos and the upcoming strategies and the upcoming firefighting. What I have noticed, and I'm sure you will be agreeing with me, that in the short range, market can be very brutal and very irrational. It can show you huge and volatile movements in the short term, but in the long term or during let's say a year span, you'll see market behaves rationally. When you're dealing with the short-term options, that is the current month or let's say the weekly options, you have a nightmare, that is gamma effect, that is a black swan event or a huge moment at the end of the expiry can give you huge losses and disturb you psychologically. Second, you collect lesser premium, therefore your break even is very less and you need to play within those range. And third point, you have to be a bit of more active on the screen into the market. So if you're going to a job or you have some other business, it kind of becomes difficult to deal with, or it might hinder your actual work, your actual career. You must have guessed by now that we'll be dealing with these long-term options. Before that, I want you all to understand about expiries very thoroughly. So let's take an example. Let's say we are in the January month. So if you go to the option chain, you'll see you have expiries for the current month, that will be January. The far month expiry, that will be February. Far month, that is March. Now there is another series of option expiries that deals with the quarter to quarter basis. We all know there are 4 quarters: March, June, September and December. So in these 4 months you'll find the expiry. Now what I am suggesting you to do is deploy strategies for the December expiry, regardless of where you are, whether it's January, whether it's March, June, September, it's okay. But deal with long-term options. We've already discussed the shortcomings for the short-term options. Just reverse them and those will be your plus points when you're dealing with the long-term options. Things should be kept in mind while deploying a straddle, strangle or anything else with the long-term options. That will be a part of the upcoming videos. But yeah, let's discuss more about these long-term options. Many of you might question, and even I questioned when I got to know this, that what about Theta Decay? Hey man, we are an option seller. We want time to be in our favor. If you're selling options for the very far expiries, then what about the Theta Decay? And won't it become very boring? You will have no action, there will be no adrenaline rush in our minds. So the answer to that would be, first of all, consider stock market as a business, not as a casino. Casino can give you adrenaline rush, but businesses can become boring, and money making should be boring, right? That's how I guess Warren Buffett and every other investor has made actual money. They remain invested for a very long term period. And about the Theta Decay, this main strategy of long term options will be combined with short term strategies to firefight and do adjustments, and those will guarantee you the regular returns which you can make during that period. And the doubt that comes to people's mind when they hear about these stuff is, what if VIX is not too much right now? Or what is your stance about VIX while taking the strategies? Simple answer to that, a VIX which is high can go higher, a VIX which is low can go as low as possible. do not try to time it, deploy the strategy. We'll do the adjustments as we move further with time. A very special point, if there is a special event that is coming nearby, wait for that upcoming event. At that point, you'll get the maximum VIX and thus the maximum break even for your strategy. Now, another query. Hey Karthikeyan, if we are dealing with these long-term options, what about our margin? It will be logged for don't know what long period. First of all, I already told in the introductory section that all these strategies require a good amount of capital, right? And talking about the capital that has been blocked during the long-term options, you can always pledge your stocks, mutual funds and get the margin benefit for the long-term options and just keep them pledged. Now, a very important part of these long-term options is hedging. How to do hedging when it comes to long-term options? Do you want me to buy the option for those long-term expiries? Man, I'm going to pay a lot, right? The premium will be a lot. And do not forget, hedging, besides giving you safety, also decreases your deployed margin by a huge amount or something else. Those things in the upcoming videos. Stay with me. Thank you.